Alibaba was a huge position. You really loaded up in the first quarter. You cut back, I think, in the second quarter. What are you doing now? Did the China moves over the last few days? But just because you were saying in the past you wouldn't go more than 10 or 12%, or the most recent things we've seen are that you have about 12% of Alibaba. Does that mean you put those aside and you would own even more than that?
As I said, the value at risk model is what I sleep at night. I went over that limit on the Fed announcement, in the last week. I went more when they said a day or two ago on their Fed. And last night, I did more.
Just Alibaba? Or are you talking JD, Baidu, TDB, two Chinese ETFs?
Everything. ETF, how we do futures, right? Everything.
The man you just listened to, his name is David Tepper. So who's David Tepper and why should we listen to him? So David Tepper is an absolute legend in the hedge fund space. He's the co-founder of Appaloosa Management and the owner of the Carolina Panthers. So if we take a look at his net worth, this is a good reason to be listening to him, right? So he's worth an estimated $21.3 billion in 2025. And when we take a look at his track record, he's outperformed the market since inception, right? 28% since 1993, right? So you heard David Tepper's message loud and clear. He said, buy everything in China. Everything in China is cheap, right? So in this video, we're going to be talking about three main things. Number one is why David Tepper is so bullish on China. Number two, we're going to take a look at David Tepper's portfolio, right? To make sure that he's practicing what he's preaching. And number three, we're going to take a look at one of my favorite China stocks right now. I'll do a full analysis and maybe you guys can understand why I'm buying this stock right now, even today. So let's watch this YouTube video where David Tepper is sharing his thoughts on China. And you can see that the YouTube video is actually a bit dated on the 26th of September last year. But I still feel that all the information in here is applicable because the stocks have only moved about 10-20% since this video's ad, right?
Okay, they go 50, they may go more. We think, oh, mortgage rates in this country. Oh, we think business.
So I sped up the video a bit if you are feeling that why is this video so fast, right? Because I don't want the my video to be too long, right?
Business loans in this country start, or we think interest on the net. You immediately thought China and currency differences around the world. So that was more important to you.
Because the undervaluation is, listen, you can look at your chart and look at the chart above on your screen right there, whatever stock you like in China.
So that's the first point that he brings up, right? The undervaluation of the stock is way too much, right? And his example is Alibaba.
They are, even with the recent moves, they're like on a flat line low compared to where they have been in the past. And you're sitting there with single multiple PEs with double-digit growth rates for the big stocks that trade over here. That's kind of versus what, you're 20 plus on the S&P. Right. Okay, and then you have, so the question was China going to do the things that you want them to do? Okay, are they going to do the easing measures that you want them to do? So yeah, they came the other day, and what's his name, Pan Gongcheng, and I apologize because I can't even speak English well. He came out and he was like jovial. It's like, whoa, jovial, saying we're going to cut and we'll give you more. And he said, we'll do more and more if needed. Now, the Chinese to say we'll do more and more if needed, they don't say that because it's not been healthy to say those sort of things in China. But they said that the other night, and I've listened very carefully what government officials say. So I took it that they did a lot. They exceeded expectations.
So you can see that Alibaba is trading about $101, and I think currently is trading about $124 on the US markets, right? So you can see that it's not completely ran away. It hasn't doubled since he's spoken, right? So if it's single digit multiples and it increased by 20%, maybe it's trading at a 10 times PE or something like that now, right?
And he promised to do more and more and more. Okay, and that's very strange language, especially for any central banker, but especially over there. So that was the first thing that happened. And last night, we heard that they were going to have some kind of meeting, but they kind of blew away expectations on the fiscal stimulus, that they were going to do. Now, fiscal stimulus, if you look at your charts, if you like charts, because you used to be a broker, and that was a good way to do things fast. What can happen around the world when they do that? That's what you have to ask yourself now. So now you have the Fed. So just to backdrop again, the Fed's easing. You have a few more easings coming. The Japanese, they don't know what they want to do right now, but it doesn't matter what people think. They're going to be forced into things, and I can talk about that in a second. The Europeans are lowering rates, and now the Chinese are lowering rates. Okay, and they're aggressive in how they're going to do it, and they're also, believe this or not, swap facilities to buy stocks. Encouraging buyback of stocks, encouraging buybacks of stocks. Okay, this is China. All right, this is stock buybacks. Not only encouraging it, lending you money to do it. And they're giving money like health money where you can put money out and you have no losses if you want to do it.
So I think that's the most important point, right? Since September, they have mentioned this, that they are going to lend companies money, right? And I have actually been seeing a lot of companies, especially in the company that I'm talking about later, that they are actually borrowing money. The banks are giving them money to do share buybacks, right? That's how depressed the Chinese stock market is right now.
You know how that thing works? You have only the money you put up and you don't lose money. That's a great deal for me. I want to be over there bar for some of this stuff. So
what about the relationship between the United States and China? How the Chinese government may or may not feel about American investors, but maybe more importantly, how the American government feels about U.S. investors investing in China too. What's the risk? How do you?
That would be a risk, and that's why you have limits on how much you would invest. However, the other thing I thought you were going to ask is about tariffs and stuff like that. I do not care. Yeah. This is internal stimulus. In the fiscal stimulus they did last night, they're going to encourage consumption directly.
So he's taking a very strong stance, right? He doesn't care about whatever the US policy is, right? Because he's saying that China itself has enough support to hold these shares, push these shares higher, right? So fiscal stimulus in China is more important than tariffs in the US.
Saying it. So they're really doing all the things that people have asked them to do over these years. So what will happen on world markets? So now you want to talk with the United States. Most of your viewers are here in the United States.
Or Europe or Japan.
Oh, Europe or
Japan. You started on Japan.
Okay, so we can go around the world. Obviously, this is incredibly good for very undervalued Chinese equities, okay? Especially when the government's encouraging
the
buybacks, and for you to take risk to buy stock. Right. Take a loan out, buy stock, you can't lose money on your loan. Great deal for me. I would, if you want to be Chinese, is Sorkin a Chinese name? No, sorry. Anyway, sorry. So you have, so United States. So you have this world, and so I'm trying to figure the United States. So it's not really your first plug to go.
So I think that's about all that he's talking about for China, right? So number 2, let's take a look at his portfolio, right? Clearly, he has a weightage on China, right? Because you can see that his portfolio is actually 15% in Alibaba stock, 15% in one stock, and it's not a small portfolio, right? It's a $6.5 billion portfolio. And then let's take a look. He has Pinduoduo at 8%, and he has JD.com at 5.6%. And he has a lot of US and China mix in his portfolio, right? But you can see here, it's another iShares China ETF. And basically, he has a big weightage in his portfolio in China, right? I would say above almost 30%, right? You can see 23% here, 28%. Yeah, it's almost 30-something percent. So you can see that David Tepper is clearly putting his money where his mouth is, right? He's not just talking about it, right? So next, I'm going to be talking about the stock that I'm buying right now. So I've hidden my face because yesterday I noticed that I've blocked quite a lot of the slides, right? So we're going to talk about JD.com, right? And JD.com, I've just had a Gemini summary of it. So JD.com is a major player in China's e-commerce market, second only to Alibaba. Here's an analysis of business and competitive advantage. So JD.com's business is e-commerce focused, direct sales model, logistic networks, and also technology integration, right? So I think the second slide is the most important. So what are JD.com's competitive advantage, right? So authenticity and quality, superior logistics, comprehensive product selection, and technological prowess. And the last is strong brand recognition, right? So by far the biggest moat that JD.com has is actually network effects, right? Because the more buyers you have on your platform, the more sellers will come to your platform. And you can remember back in 2021 or 2022, China actually cracked down on this one platform thing, right? Which is that if you sell on Alibaba, you have to sign an agreement that says you will not sell on other e-commerce platforms, right? So I think the total addressable market has actually grown exponentially since then, right? Because one of these platforms, basically one user can become 3 users, right? Because last time in the past, maybe you can only sell on Alibaba. Now you can sell on Alibaba, Pinduoduo, Meituan, JD.com. You can sell on everything, right? Which leads to more customers and also more sellers on the platform, right? So because obviously we live in the Western world, or we don't live in China, we don't know what JD.com is, but over there it's actually the biggest revenue in the country, right? So superior logistics, why I don't feel like this is really a moat is because they built out superior logistics, but then they let their competitors use their logistic network as well, right? So next we're going to take a look at some of the challenges. So some of the challenges are very real, right? Intense competition in China. So maintaining profitability is stated as a second challenge, right? This I don't really feel like it's a challenge. It's more like they have to have a lot of capex versus their competitors, right? In fact, if you take a look at JD.com's capex compared to Alibaba before Alibaba started investing in AI, you can see that JD.com was having a lot of capex versus Alibaba. So the last thing is the dependence on Chinese markets, right? This can be a challenge, or it can also be a tailwind, right? Because you can see that all the stimulus and all the things that David Tepper is talking about will actually benefit, right? So this will turn from a challenge to actually a tailwind. So overall, JD.com has carved out a significant position in China's e-commerce market by focusing on product quality, efficient logistics, and technological innovation. Their competitive advantages have gained them a loyal customer base and compete effectively with large players like Alibaba. However, they need to navigate the challenge of a competitive market and maintain profitability to ensure long-term success, right? We're going to take a look at key differences between Alibaba and also JD.com. So Alibaba's business model is a marketplace and platform. So JD.com is a bit different. It's a retailer and a platform. So inventory, Alibaba doesn't own any inventory. JD.com owns and manages inventory. So next is a revenue source. It's commission, ads, and services. JD.com has product sales and logistics. And next, I think they can also add this, right? Ads, right? And also commissions, right? Because you can see that any e-commerce platform can actually become an ad platform. And next is logistics, so partners with third parties, and this owns a logistic network, right? But we can say that Alibaba has China as well, right? And China is kind of Alibaba's logistic up. So next, if we take a look at the hybrid model, right? So both companies have also expanded into areas that blur these distinctions, right? Very, very true. Because Alibaba has introduced inventory-based models, which is they are taking more ownership of the inventory, while JD.com is actually allowing third-party sellers on its platform, right? Acting as a marketplace in addition to its retailer operations. So that's why nowadays, if you take a look at the three big e-commerce platforms in China, actually is quite similar, right? It's Alibaba, JD.com, and Pinduoduo. These are the three big e-commerce companies, right? And their business models are quite similar, right? So let me add my face back on. Okay, not blocking anything. If you're enjoying the video so far, do help me smash up the like button, hit subscribe, and also hit the bell button. This will help out the channel immensely, and I thank you very much. So here's my base case and bear case and also bull case for JD.com, right? So let's start with my base case. It's $3.80 in EPS. So the numbers I've gotten from their latest filings and also the Q4 ending, right? And also I've made a bit of adjustments, right? So you can see that the latest free cash flow was actually 4.784 billion, but I used 5 billion, right? Why is it, right? Because I adjust for a bit of this, right? So I'm focused on what the actual free cash flow is for the company, right? Not when they have heavy capex cycles, you need to make a bit of adjustments, right? So I'm not doing anything like that is too stretching reality a bit too much, right? I'm going from 4.8 billion to 5 billion, right? So I think that's a very conservative number. So next, it's 10% free cash flow and EPS growth, right? So 5% from buybacks and 5% from growth. So if you take a look, my numbers are very conservative for my base case, right? Because I'm focused on not losing money. Because actually they bought back 8.1% of their ordinary shares, right? So this is what I'm talking about just now when I said that these companies are buying back shares like crazy, right? So basically people can talk about how bad the CCP is or whatever the Chinese government is, but when they ask their companies to do things, their companies do it, right? And you can see that in this case, if they want the share market to go up, the share market is going to go up, right? 8.1% in in 9 months, not even a year, 9 months. So these are 2029 numbers, right? I've estimated 2029 EPS to be $6.12, and how I did it was 380 times 1.1 times 5, right? To the power of 5, right? So these are some of my assumptions, and these are some of the results you get if you use my assumptions, right? If these numbers hold, it's $6.12 of EPS in 2029. At a 20 times EPS multiple, it's $122.40 a share. And that represents a 3.146x upside and also a 214.6% upside, right? You can see that this is actually less one, right? Because this includes the base number here. So the next is if we value it using a free cash flow ratio. So 8.052 billion of free cash flow in 2029, 20 times multiple is 161 billion in market cap, or 2.73x upside, or 173% upside, right? So you can see that the free cash flow and also the EPS multiple is actually different, right? When it comes to giving you the results, you can see that the numbers are slightly different here. Not too much, it's about a 40% difference within 5 years, right? So that's not that big of a difference. But obviously, when we are trying to estimate fair value for stocks, right, you don't want an exact value, right? You want a range, right? So this is a range basically using two different methods, getting two different ranges. And also the next we have our bear case, right? So in the bear case, we have $3.80 of EPS, $5 billion in free cash flow. And I'm not lowering this because it's already 2024 results, right? So I'm just estimating future, right? So if my bear case assumption holds out, is 5% free cash flow growth. Basically, it's 5% from buybacks and 0% from growth, right? Which I feel is highly unlikely, right? Because you can see that China is moving into a stimulatory fiscal environment. And even without the stimulus, they are doing 5% growth, right? So can you imagine when the stimulus comes back? Woo! So 15x EPS or free cash flow multiple, this is $4.85 in EPS in 2029. With a 15x multiple is $72.75, or 1.87 times upside, or 87% upside, right? So you can see that even in the bear case, it's 87% upside in 5 years, right? So when it comes to the free cash flow method, it's 6.381 billion of free cash flow with a 15x multiple. This is a $95 billion market cap, right? Or 1.625x or 62.5% upside, right? So you can see that this is the kind of investments that I'm looking for, right? Because even in the bear case, we're not going to lose money, right? And that's very, very important, right? And it's not going to stagnate completely 0% returns. So if it's 0% returns, yeah, it wouldn't exactly be that attractive, right? Because you can put it in treasury bonds and you still make more money than that, right? So for the bull case, and I don't think you're even ready for the bull case, right? Because the numbers are actually just so ridiculous, right? But in a certain sense, I feel like this is a very realistic numbers, right? So in the bull case, it's $4 of EPS, $5.5 billion in free cash flow. So this is what I'm estimating to be their this year EPS and also free cash flow, right? If their capex is not as high as I think, and this EPS is also if their numbers are a bit more adjusted than I think, right? So we take a look at these two assumptions and we take a look at this assumption, right? I think this assumption has really made the upside very, very high, right? So 23.5% of free cash flow and EPS growth, right? So how do I get that? 8.5% from buybacks. And this is not very high, right? Because you can see that even now, actually, it's 8.5% from buybacks because they just authorized a $5 billion buyback program, right? And their current market cap is about 58.91 billion. So it's 8.5%, right? The yield, 7.5% from growth. This is just China's growth, right? Because of the fiscal stimulus and all that, right? And then the last is from 7.5% from efficiency, scale, and also margin expansion. So I think these are very possible numbers. I wouldn't put it at my base case because that's just kind of ridiculous, right? But in the bull case, I think this is very, very possible. So at a 30 times EPS and free cash flow, your earnings are going up 23.5% a year. This definitely is warranted, right? In fact, you can say even 60 times is warranted or 50 times is warranted, right? But I'm not going to get that ridiculous, right? So if my estimates hold up, it's $11.50 of EPS in 2029 with a 30x multiple is $344.76, which represents 8.8x upside or 786%, right? So in the free cash flow valuation, it's about 15.8 billion in free cash flow, 30 times multiple. This is a $474 billion market cap or 8.04x upside, which is 705%. Right? I think I typoed this. I think it's 704%. So what do I think? Is this very realistic? I think it's quite realistic. I'm not even stretching too far to get to these kind of numbers, right? So I'm not putting like 50x EPS slash free cash flow multiple. So I don't think I'm like running it too high, right? The numbers. But I think this is a very, very possible scenario, right? So some of the verticals that JD.com can grow in is obviously the JD e-commerce. And also this is a very, very big thing, right? JD Plus, right? So China has 1 billion people. Don't you think they can get maybe 50, 60, 70, 80 million to join JD Plus, right? This is basically JD.com's version of Amazon Prime. And then the next they can grow is JD Logistics, right? This is basically, think of FedEx, UPS, or even Amazon's delivery fleet right now, right? So these businesses are basically infinite scale businesses, right? They can get bigger and bigger and they can consume a lot of capital. So roughly that's where I think JD's growth will be coming from. So in the last case, I want to talk about the current valuation, right? So we always have to come back to today, right? Even though we see all the upside or all the predictions and all the valuations, we still have to look at the valuation today and dictate that whether it's a good buy today, right? Because you can take a look at the future growth too much and then you overpay today, right? So when we take a look at the market cap, it's 58.91 billion. They have about 18.984 billion of cash. This is cash and cash equivalents minus debt, right? Then you get this number. So they have $3.80 in EPS, 5 billion in cash flow. So when we run the numbers, these are the numbers that we get, right? So currently the price is 38.91 when I was doing this valuation yesterday night anyways. So it's $38.91 per share and divided by 3.8, we get 10.24 times earnings, right? So when we use the free cash flow method, it's $58.91 billion divided by 5 billion in free cash flow, which we get about a 12 times free cash flow, right? So when we deduct out the cash, this is where the magic happens, right? When we deduct out the cash, this is 39.926 billion. So when we use this 39.926 divided by the outstanding shares, which is 1.45 billion. So if you're wondering why I have to do that, because I have the cash, this is the cash number minus the market cap, right? But we're trying to look for earnings per share. So this is why I have to do maybe a bit more math, right? So after we get it, it's $27.54. This is the value without the cash inside the company. And divided by 3.8, which is the EPS here, we get a 7.25 times earnings, right? And when we use the free cash flow method, it's 39.926 billion divided by 5. We get a 8 times free cash flow ratio, right? So anyway, I look at it, JD.com is incredibly cheap, right? So if you run through even my base case, my bear case, and my bull case, all of it, you're going to be making money, right? If my assumptions hold and they don't just go to a straight up negative EPS number, right? So lastly, I want to take a look at some of the articles that are from China, and then we'll end it there, right? So I'm just going to go through the headlines because I think this video is already very long. So China's economic stimulus measures since September, right? These are a very long list, right? You can pause the video and take a look if you want. So I'm not going to read it out one by one. So back in 2021, Tencent actually gave away a lot of JD.com to shareholders, right, as a dividend. So you can see this is back in 2021. So you can see that it's been a brutal sell-off ever since then, right? And the last is actually Walmart sold its $3.6 billion stake in a Chinese retailer, right? So this was somewhere around here, I think, right before this rally. If you take a look at the date, August 21, I think it's somewhere here. Yeah, somewhere here. And they missed out on this big pump, right, from the Chinese government. But now it's back to where we might have some opportunity, right? So I bring up these points because you can see everyone and their mothers that wanted to sell, right, has probably sold, right? Because you can see that Tencent, if they give away the shares, maybe the Tencent shareholders don't understand what's this JD.com. I don't want this JD.com. I want more Tencent shares. So they sell the JD.com shares to get more Tencent shares, right? And then you can see Walmart, they're selling out of their stake. So who is left to sell? The people that are believing in the stock like me are not going to sell the stock at these kind of dirt cheap prices. So who's there to sell, right? So before I end this video, I just wanted to say thank you to all the support yesterday, right? So you can see that I posted this video about 2 days ago. Actually, there has been a huge amount of views compared to my normal views. If you take a look, my typical is between 20 and 100 and it's 1,100, right? So maybe those numbers are skewed because I just started posting videos again. But maybe we can get to 420. Can we get to 420? Oh, we hit the magical number, 420, right? So yeah, thank you guys a lot for all the support. And that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead, and peace out.